Good morning. Welcome to your daily Solo 401k webinar Q&A session with my Solo 401k Financial. Here's where we help you to stop overpaying taxes and start building real retirement wealth. Well, here we are in December, towards the end of December. We're nearing the December 31st Solo 401k setup deadline. The good news is that you still have time to set up a solo 401k plan, and we can set it up the same day, and you can wait and fund the account next year in 2026. We're going to delve deeper into that. So before you can even open a solo 401k, you have to be eligible, obviously. In order to open a solo 401k plan, you have to be self-employed, not employ any non-owner full-time W-2 employees in your business who work 1,000 hours or more. You can always exclude anyone who's under age 21, regardless of how many hours they work. So this is your chance to get answers. Use the chat to ask questions. Go ahead and type them over, and I'll make sure to get to them all. Looks like we got a Brian Woods here. How can I check the status of my application? Submitted all paperwork a couple weeks ago and would like to fund before year end. Great question. Take a look at the email that we sent to you back on December 11th, 2025, which has the bank account guide to open up the bank account for the solo 401k. Looks like we sent that email to you at 9:42 a.m. on December 11th. Take a look at that. Also, keep in mind, you don't need to open the bank accounts right now or the holding accounts or make contributions. You've already met the deadline. All you have to do is sign the plan documents, and your plan is effective immediately for 2025. As a result, you can wait and open the bank accounts and make contributions. That's employee, employer, and voluntary after-tax contributions. Those can be made for tax year 2025 and 2026 by your business tax return due date plus timely filed extension. So congratulations, you've met the deadline. So what needs to be done by December 31st for someone who's looking to open a solo 401k plan? So this goes out to all you procrastinators out there, or all you out there who are too busy running your own self-employed business that you haven't had a chance to look after yourself and open up your plan. Well, the good news is you still have plenty of time. All you need to do is, if you decide to use my solo 401k financial services, you need to complete our online application. That takes probably a minute to complete. We ask about 10 questions, very basic information such as your name, your address, business name, and so forth. Once you complete that application, we'll draft the plan documents the same day. Keep in mind, a solo 401k plan is a retirement trust. So it's the actual legal plan documents that determine when your plan is effective, which means that as soon as we provide you with those plan documents, your plan is considered established. You can then sign the documents and upload those back to us. And again, your plan is effective for tax year 2025. As a result, you're going to be able to do all of the following next year in 2026 by your business tax return due date plus timely filed extension. For example, let's say your self-employed business is taxed as an S corporation. That means that you're going to be able to make employee contributions, employer contributions, and voluntary after-tax solo 401k contributions for tax year 2025 by September 15th of 2026. And if you file for a 1120S, which is the tax return for an S corporation, if you file a timely extension, you're going to have until September 15th of 2026 to make employee contributions, employer contributions, and voluntary after-tax solo 401k contributions for tax year 2025. You can also perform the mega backdoor Roth conversion in 2026. You can also open up the bank accounts or brokerage accounts in 2026. So all you have to do to make the plan effective for tax year 2025 is just establish the plan, which again is the signature of the solo 401k plan documents that we draft the same day. So in short, you still have plenty of time. So here's a further breakdown of the 3 steps that you need to follow so that your plan is effective for tax year 2025. You complete our online application. We then draft all the plan documents, all the legal plan documents, adoption agreement, trust agreement, beneficiary election form, and so forth. We then provide you with the download link to sign those pages. You sign them, you upload them, and your plan is effective. You can even wait to return the plan documents to us in 2026. You just need to make sure that the plan is established in 2025, and we can do that for you by completing these 3 steps. So again, no need to run around like a chicken with a head cut off, trying to open up holding accounts, make contributions, because all you need to do is sign the plan documents. Let's take a look at some more questions here. Is there a year-end deadline, or is it advised to move recently contributed non-after-tax funds to an outside Roth IRA? After-tax account is at Fidelity, and want to move basis to outside Roth IRA. How do you do that? Fidelity checkbook or Fidelity withdrawal form? See if I understand your question. Is there a deadline to move recently contributed non? So you made a voluntary after-tax solo 401k contribution, it sounds like. So no, there's no deadline. You can wait to convert those voluntary after-tax solo 401k funds next year in 2026. And it's not going to be a taxable conversion, because when you convert voluntary after-tax solo 401k funds as part of the mega backdoor Roth, the basis gets converted to the Roth solo 401k or a Roth IRA, and you get to choose. Those funds have been taxed already, so you're not going to pay taxes on the basis. And then the gains, you can choose to transfer the gains to the pre-tax solo 401k or to a traditional IRA, or you can just convert those small gains over to the Roth solo 401k or the Roth IRA, and you would only pay taxes on those small gains. As far as how to convert the funds from the voluntary after-tax solo 401k to the Roth solo 401k, it just depends where your Roth IRA is at. So again, you can choose to convert it to the Roth solo 401k or the Roth IRA. If you decide to convert it to the Roth IRA, then first you have to identify where the Roth IRA is at. So for example, if your Roth IRA is at Vanguard, then you could use the checkbook that you have and make the check payable to Vanguard and send that check to Vanguard for deposit into that Roth IRA. Let me see if I can dig something up here on our website here. You can also complete Fidelity's distribution form to convert those funds to the Roth IRA if it's an outside Roth IRA. Let me see if I can find that. Now, if you have a Roth IRA at Fidelity, then those funds can be moved over internally from the voluntary after-tax solo 401k to the Roth IRA at Fidelity. Take a look at this link I just shared there with you. Let me make sure I sent that over here. Take a look at this link here if you have the Roth IRA at Fidelity. Now, if the Roth IRA is at Vanguard, for example, then let me see if I can dig up a link for that. It's the same form that you would use if you were going to move it, if you were going to convert those voluntary after-tax solo 401k funds internally. Give me a moment here. Here's a link here if you were going to convert those funds from the Fidelity voluntary after-tax solo 401k to a Roth IRA at E-Trade, for example. So you can search our website for the various procedures. Give me a moment here. Let me find one for E-Trade if you have a Roth IRA at E-Trade, or at Vanguard, I should say. So when you process the mega backdoor Roth solo 401k conversion, you get to choose. You can convert the voluntary after-tax solo 401k funds to the Roth solo 401k or to the Roth IRA. Let me share a link if you were going to convert it to the Roth Solo 401k from the voluntary after-tax Solo 401k. Take a look at this link here. Under all of these scenarios, a Form 1099-R will need to be issued to report that conversion to the government. For clients of my Solo 401k Financial, we'll go ahead and issue that Form 1099-R as long as you timely request it, and we don't charge additional fees for the issuance of the Form 1099-R. We'll provide you with the copy, and a copy will be filed with the IRS. Here's a link to the Forms tab of our website where you can request to have the Form 1099-R issued for that conversion. There it is right there. Take a look at that link there. Let's take a look at some more questions here. Here's a question. I know the IRS has some prohibited investments, but does my Solo 401k have any prohibitions on investments? Great question. And here at my Solo 401k Financial, we draft the Solo 401k plan documents for the maximum flexibility under the regulations, which means that as long as you follow the IRS regulations regarding the types of investments that can be made, we do not place any restrictions on the types of investments that you make. So, for example, under the IRS regulations, or specifically the IRS code, a Solo 401k plan may be invested in real estate, whether commercial or residential. It can be invested in private equity. It can also be invested in promissory notes, tax liens, cryptocurrency, precious metals. So we don't place restrictions on our plan with respect to what can be invested in, as long as it matches what can be invested under the statutory regulations. So good question. As a matter of fact, many of our clients invest in alternative investments like private syndicates, real estate, notes, and so forth, and of course, equities, typical equity investments, whether stocks, index funds, exchange traded funds. They'll even invest in CDs, bonds. Our plan here at my Solo 401k Financial is fully self-directed. Here's another question. Besides the 5500 Easy and 1099-R, what other things should I be aware of that may be required reporting? Great questions. So with regards to reporting, let's say you invest your Solo 401k in a rental property. Let's further assume that the Solo 401k utilizes a non-recourse loan, where the Solo 401k gets a loan from a hard money lender or a bank that specializes in loaning funds to a Solo 401k plan. That type of transaction will not trigger what's referred to as unrelated debt finance income tax. However, let's say you turn around and you invest your Solo 401k in a business that number one, it's not your business because that's not allowed, but let's say it invests in a business such as a shoe company. That's a private company. Let's say it's an LLC. Let's say you know someone you used to go to college with, you guys played football together, and then after college, you decided that you wanted to apply your entrepreneurial spirit. You started a shoe company, and now you or I should say your friend started a shoe company, not you, and now your friend approaches you and asks you to invest in his private LLC where he's launching a new line of shoes. Your Solo 401k can invest in such a company, and if it does it as an equity investment where it buys equity, that is units in that LLC, that's going to trigger unrelated business income tax. Because with a retirement account, whether a self-directed IRA or a self-directed Solo 401k invests in a business that offers goods or services, that triggers unrelated business income tax. You're going to have to file a tax return called 990T. It's a Form 990T to report that unrelated business income tax. So that's another instance of reporting that would apply to the solo 401k plan. Okay, let's see if we have some other questions here. Does my solo 401k have any minimum opening investment? We don't. Because keep in mind that here in my solo 401k financial, the reason we're so popular is that you get to choose where to hold your money at. So your funds can be held at your local bank. It can be held at a brokerage firm, whether Fidelity, Schwab, any brokerage firm that you want to work with, as long as that brokerage firm is on board. Altruist is a common one that our institutional advisor clients use. So we never hold your funds. We don't take deposits. We stick to what we do best, which is to be the solo 401k plan document provider and the compliance provider, which means we take care of all the IRS plan updates, including amendments. We also handle the reporting, such as Form 5500 Easy, once the market value of your plan exceeds 250,000 in value, as well as Form 1099-R for reporting distributions, like required minimum distributions, as well as conversions. But that's why we're so popular. We don't say, well, you need to use this particular bank or brokerage firm. We let you choose, and therefore we don't put any type of deposit amount restrictions. What are the banks that allow for self-directed checking account? Do you know if Chase Bank accepts it? So our clients have used all types of banks. They've used regional banks, credit unions, big banks, from Wells Fargo to Bank of America. Chase Bank used to do it, but they no longer provide bank accounts for solo 401k plans. That's probably because I know that they partner up with some other institution to offer non-self-directed solo 401ks that only allow for equity investing, for example. But they no longer allow for bank accounts. That's changed. They don't offer bank accounts anymore for solo 401k plans that are self-directed. So you can use your local bank or credit union. You can also use an online bank. You can even use Fidelity or Schwab. Those they'll provide brokerage accounts with checkbook control. They'll come with a checkbook that you can use for investing in real estate, for example. Even though most of our clients that use Fidelity or Schwab will actually submit a wire directive if they want to invest in a rental property, and then Schwab or Fidelity will wire the funds directly to the title company for that real estate investment. And keep in mind that you don't need to open up the bank accounts for the solo 401k now. They can be open next year in 2026 if you're opening the plan for the first time, or if you just open the plan, because it's the establishment of the plan, which means with the signature of the plan documents, it determines if the plan's effective or not, because those are legal documents. It's not when you open up the bank or holding accounts or brokerage accounts. It's when you sign the plan documents, and therefore you'll have until your business tax return due date in 2026 to both open the bank accounts and make the contributions for tax year 2025. And as I already mentioned earlier, if you file for an extension, you'll have an extra 6 months. So there's no hurry on that with that regard. Here's a question here. How specific for my company? I have multiple member LLC with 3 members who own equity. No W-2s. We are not related. Not everyone is necessarily going to give money. Wanted to understand how to set this up, what cost is. Can we make contributions from our own bank accounts, or do they need to come from the corporate accounts? What bank or brokerage would you use, and what are their fees? So talk about a load of questions here. That's some specific, but multiple member with 3 members who own equity. So in order to open a solo 401k plan, you have to have owner-only employees in your business. You cannot employ any non-owner full-time W-2 employees who work 1,000 hours or more. You seem to check that box off. So it looks like there's going to be a total of 3 participants, and each of you is going to have to own at least 3% or more interest in that entity. And you each would have to be not only owners, but also employees. So essentially, For the plan, our setup fee covers the first two participants. If this is a 3 participant plan, then that would be an additional fee. So that would be 650 divided by 2, that's 325. 650 plus 325, whatever that math is, that would be your fee to set up a plan with us because you have 3 participants. So 650 plus 325, that would be $975. And that would cover the setup of the plan as well as the first 12 months of support, as well as for being the plan provider. So you would be covered from December of 2025 through December of 2026. You would complete our online application, and then we would drop the plan documents. All you need to do is sign those plan documents, and your plan will be effective immediately. And then you can wait till next year in 2026 to open up the bank accounts, brokerage accounts, and make the contributions. And with respect to how contributions are made, they're going to be based on each owner's respective W-2 wages. You're going to have to look at each owner's W-2, specifically box 1, the gross wages, and the calculations will be based on their respective W-2s. You each don't have to contribute the same amount. Some can contribute, some don't have to. Some can make employee contributions, some can make employer contributions. Keep in mind, a solo 401k plan is not a traditional plan. Therefore, you don't have the whole testing that applies to it. So you don't have to contribute the same amount for all participants. As far as how contributions are made, again, they're going to be based on your W-2 wages, each owner's W-2 wages. They can flow directly through payroll from the business bank account. What matters is that you have the necessary W-2 wages to support that contribution. You can also have the contributions flow from each owner's personal bank account once the W-2 wages have been paid. You just need to make sure that it's properly accounted through the W-2 and that they're properly reported when you file that 1120S for that LLC tax as an S corporation. As a matter of fact, let me share a link from our website that talks about how to report contributions, both employee and employer, as well as voluntary after-tax solo 401k contributions for all entity types, whether an S corp, sole proprietorship, or partnership. Give me a moment here and I'll get that link here. Okay, take a look at that link there. It talks about how to report contributions on your business and or personal tax return, as well as the W-2 for those that are taxed as an S corp or C corp. Each of you, if you have 3 participants in the plan, you're each going to have separate holding accounts under the plan. So it's one plan because it's sponsored by the business, but each participant is required to have separate holding accounts because a solo 401k is a defined contribution plan. Therefore, you're required to separately track each participant's funds. So it will help you to open up separate bank or brokerage accounts for each participant under the plan. Let's take a look at some more questions here. Here's a good question. Trying to decide if I should open a bank account or a brokerage account. What factors should I consider? Let me share a page from our website so you can compare it head to head. Give me a moment here. Let me dig that link up here. Okay, here's a good link here. We put a video together and a nice chart that'll compare them. So take a look at that link right there. But most of our clients tend to open up brokerage accounts instead of bank accounts because the brokerage account will allow you to not only invest in equities, but you can also write checks or wire funds out if you want to invest in private equity, private placements, promissory notes, physical real estate like rental properties. So take a look at that. So that's a good page that we put together that compares the bank account versus the brokerage account. And you can go to our website. There's a search box on the top right-hand corner. If you type in keywords there, it'll bring up pages based on the topic that you're researching. You can also visit our artificial intelligence page, which is solo401k.ai. Let's keep going through some questions here. Here's a question. I know the voluntary after-tax contributions are not reportable on the Gusto W-2. Rollover to Roth IRA will be reported in a 1099-R. However, do I need to check any boxes on Gusto W-2? Previously, when I did the SEP IRA, I checked 13, retirement. Should I not check that box this year now that I'm doing all voluntary after-tax contributions to my solo 401k? So I shared a link to a page on our website that has cheat sheets on how to report contributions, all types, on your W-2. Let me share that link again. And there's a good chart on this page here. And keep in mind that the contributions for voluntary after-tax solo 401k contributions, there's that link there. Those voluntary after-tax solo 401k contributions are actually going to be reported indirectly on the Form 1099-R, which is the same Form 1099-R that's used to report the conversion of the mega backdoor Roth, when you convert the voluntary after-tax solo 401k funds to the Roth solo 401k or the Roth IRA. So that's going to be reported. I think it's in box 5 of the Form 1099-R. Let me see if I can pull up a Form 1099-R online here. So I can reference the box number here. So yes, the voluntary after-tax solo 401k contribution, that's going to be reported in box 5 of that Form 1099-R. That's how the IRS knows that you made a voluntary after-tax solo 401k contribution, because obviously it's not reported on your tax return because you don't get a deduction for it, but it is reported in that on that Form 1099-R, box 5. And then the amount converted of those voluntary after-tax funds, the gross amount, that's going to be reported in box 1 of the Form 1099-R, the gross distribution box. Box 2A, the taxable amount, that's where we're going to list if any earnings and those voluntary after-tax funds were converted to the Roth Solo 401k or the Roth IRA. We'll list that amount there. And then in box 7, we're going to type in the letter G, code G. Yes, code G applies when you process a conversion of voluntary after-tax solo 401k funds to a Roth Solo 401k or a Roth IRA. We get that question quite a bit where individuals are like, well, why is there a code G? Well, that's the code that applies when you convert voluntary after-tax solo 401k funds or even pre-tax solo 401k funds. And again, here at my solo 401k financial, we'll issue that Form 1099-R for clients who kindly requested, and that's covered in our annual fee. Let's take a look at some more questions here. Where are we here? Give me a moment here. Don't I have to draw W-2 wages reflecting contributions for 401k this year? You don't. You can work with your payroll provider before they issue that W-2 in January to let them know that you're going to contribute a certain dollar amount to the solo 401k, and you can just park that money in your personal bank account. Keep in mind that the solo 401k regulations allow you to make employee contributions, employer contributions, and voluntary after-tax solo 401k contributions by your business tax return due date plus timely filed extension. So the solo 401k follows different rules than a traditional 401k. A traditional 401k, meaning one offered by a full-time employer that has common law employees. With the solo 401k, it's for owner-only businesses. So as a result, the regulations are more lax regarding the contribution deadlines. You can learn more about that regulation if you look at the chart and on page, it's either page 2 or page 3 of publication 560. There's a chart that clearly outlines that employee and employer contributions can be made by your business tax return due date plus timely filed extension. So again, take a look at that chart there. And keep in mind that employee contributions, let me see if I can pull up my cheat sheet on that here. For employee contributions, since we're talking about an S Corp here, let me pull that up here. Give me a moment here. For when you make employee contributions to a solo 401k plan, and if your business is taxed as an S corporation, you're not required to report those employee contributions to your W-2. You can instead report them in box 12, excuse me. So instead of reporting them in box 12 of the form W-2, you can report them on your Schedule 1, line 16. Schedule 1 is an attachment to Form 1040. Obviously, don't report those in both places, but I'm looking at a chart on our contribution reporting page that I shared with you earlier. Let me pull that page back up here so you can easily reference it. Take a look at that page right there. We have a chart that clearly outlines what I'm referring to regarding how instead of reporting employee contributions on the W-2, you can choose to report them on Schedule 1, line 16, which is an attachment to Form 1040. Whatever you do, however, don't report it in both places, because then you're going to get double credit. Okay, let's take a look at some more questions here. Here's a question. We are buying a building, assuming a Freddie Mac loan. Well, that could be a problem, and I'll shed more light on that in a moment. We want to access 200,000 of what we have in a traditional 401k with Edward Jones to put towards the down payment. If we open a solo 401k now, can we use those funds as part of the down payment? No, that's not going to be an option. Because remember, a solo 401k plan can invest in rental properties like real estate, and the solo 401k takes title to the property. So you cannot partner with your solo 401k to buy a building if you're going to be using a loan. Freddie Mac won't even allow for that type of loan. What is more, a solo 401k can invest in real estate, but it's got to be for passive investing purposes, meaning that you cannot use that building for personal use or business use. But if a solo 401k can invest in real estate and get a non-recourse loan, which means that the loan is to the solo 401k and it's got to be non-recourse, which means that if the solo 401k runs into liquidity issues and can't pay that loan back, the bank cannot come after the 401k or your personal assets. But what you're trying to describe here cannot be done with the solo 401k plan. Okay, let's take a look at some other questions here. Do you have a list of brokerages that will work with the solo 401k plan? Yes, Fidelity, Schwab, Altruist. Those are the most popular ones. I would stay away from E-Trade. E-Trade used to be a viable option, but ever since they merged with, I think, Merrill Lynch, They've been a nightmare to work with. I've seen brokerage accounts take as long as a year before they'll open them up. They'll make you submit multiple sets of paperwork. It's pretty bad with E-Trade. But Schwab and Fidelity are the most common options. If you're an advisor, you can use Fidelity or Schwab on the institutional side. You can also use Altruist. Also, on the retail side, you can use Interactive Brokers if you're not planning to invest in alternative investments, but solely equities. Let me send over a link that compares Fidelity and Schwab for those who are interested in exploring both of those. Take a look at that link right there. Okay, let's take a look at some other questions here. If I only plan to do regular investments, can I open this at any bank brokerage, use a regular brokerage account, or does the brokerage have to handle 401k plans? So, as far as I know, Fidelity and Schwab offer their own solo 401k plan, but it doesn't come with all the bells and whistles. For example, you can now process conversions. You can now process the mega backdoor Roth. You can't take any participant loans. It doesn't come with the $1,500 auto contribution credit. But if you use my solo 401k financial, which allows for all of the above, we let you decide where to hold the funds at, including at a brokerage firm, and you can choose to just simply invest in equities. We don't put restrictions as to what you can invest in as long as it's allowed within the regulations. Okay. Here's a question. I recently opened a solo 401k with you. I already have a solo 401k at Schwab that has funds and a Roth 401k that is unfunded. I have already opened up bank account for the trust. My understanding is that the Roth 401k is a sub account of the solo 401k. I want to have my solo 401k back at Schwab and my Roth 401k at IB. How do I structure an account at these two brokers? Do I need solo 401k accounts at both Schwab and IB with Roth sub accounts? Well, number one, the plan that we offer allows for all contribution types, Roth, pre-tax, and voluntary after-tax. So you can choose to have multiple holding accounts. So for example, you can have a Roth solo 401k brokerage account at Schwab for the solo 401k plan that we offer. You can also have another Roth solo 401k brokerage account at Interactive Brokers. So you can use multiple financial institutions to hold the Roth solo 401k funds for the plan offer of my solo 401k financial. So yes, that's an option, and then you can move the funds between the two if you want. And if you want us to help you open up the brokerage account at Schwab to hold the Roth solo 401k funds, that can be done next year because you have until next year to make contributions for tax year 2025. You would just submit a support ticket to let us know and we'll draft those Schwab brokerage forms. If you want to use Interactive Brokers, submit a support ticket as well. And we'll also send you a link on how to open up the Roth solo 401k brokerage account at Interactive Brokers. That one can be opened up online, actually. Let me share a link here to the Interactive Brokers site where you can open up the brokerage account online with Interactive Brokers. It's going to be a trust brokerage account because remember, a solo 401k is a retirement trust. Take a look at that link I just shared with you. Interactive Brokers. Okay, let's keep going here. There's a question here. I have recently hired several part-time workers. I understand I am still eligible to open a solo 401k as long as they don't work more than 1,000 hours in a 12-month period or 2 consecutive years of more than 500 hours. What happens when or if either of these limits are exceeded? Would I not need to open up the plan up to them or close the plan? If closing the plan, how does that work? Good question. So, number one, when you open the solo 401k plan, it doesn't matter if you employ any W 2 employees who work 500 hours or more, but under 1,000 hours, as they can be excluded. The issue is that if you're looking to open a solo 401k plan and you employ a W 2 employee who's already been working 1,000 hours or more, you would not qualify to open a solo 401k plan. But that part-time rule would not apply when you're opening the plan. That 500-hour part-time employee rule would only kick in once you establish the plan. Then, once you have a W-2 employee who works 500 to 999 hours for 2 consecutive 12-month periods, that's when you would be kicked out of being eligible to continue with the solo 401k plan, and then you would have to close it down. Let me pull up a good link on this topic here. We've actually performed webinars on this topic here. I'll shed some more light on that in a moment. We did a separate webinar on this. Let me share that page with you. Take a look at this page that I just shared there on the chat there. But what'll happen is that from an ongoing perspective, meaning you already have a solo 401k plan, once you have a W-2 employee who works between 500 and 999 hours for 2 consecutive month periods, then you're going to have to close the plan down and transfer it to an IRA, or you can convert the plan to a full-time employer plan, and now you also have to offer it to those W-2 employees. The other ongoing rule is that if you hire a W-2 employee who's not an owner, and he or she works 1,000 hours or more during the year, then you would also have to close the plan down, transfer it to an IRA, or convert it to a full-time employer plan. Take a look at that link I just shared there with you. It's got some good resources there. Actually, that's not the one I wanted to share. Let me share another one here. Give me a moment while I dig that up here. That link is okay, but we have a more recent one. Okay, take a look at that link there. And then here's the one that has a video webinar that we did on this topic. So take a look at that page there. Good questions. Okay, let's keep going here. So if this information is helping you feel more confident about your future, please take one moment to like and subscribe. It helps to tell the platform that this information is valuable, and it helps other solopreneurs like you to find it. Subscribing just takes a few seconds. Also, please like us on the different social media platforms. Here's a question here. If I want to invest in a startup private company, what is the process to make the investment? So I'm going to share a procedure here with you that you can take a look at. We have a step-by-step procedure on how to invest in a private company, private equity, or a private startup. Take a look at that procedure right there. But in short, that's one of the most popular investments that is made with our self-directed solo 401k plan. So not only do our clients like to invest in physical real estate as well as precious metals, I know gold and silver both hit a new all-time high today. It's supposed to be a hot investment for next year as well. So our plan allows for investing in both physical silver as well as gold. It also allows for investing in cryptocurrency, trust deeds, so promissory notes secured by real estate. That's another big investment that people like to make with their solo 401k. And of course, private syndicates as well. And we actually educate our clients on the rules and regulations for those types of investments as part of our ongoing support. So take a look at that link there. That's a step-by-step procedure. And there's a good video on there, though, that also goes over the process of investing in a self-directed solo 401k in private equity or private startups, private companies. Okay, let's keep going here. Here's a question. For my school teacher wife, can the wages line on her teacher W-2 be used to calculate the 25% mega backdoor? Then add a W-2 for the voluntary after tax to get to the 46,500, or does all the mega backdoor need to come from the business W-2? She is taking Max into a 403b, including catch-up. She's age 60. Good question. Only funds from the self-employed business can be used for making any type of solo 401k contribution, whether employee Roth or employer Roth or voluntary after-tax solo 401k contributions. In short, the only way to contribute to the solo 401k plan is by making contributions based on your self-employment income. So if your business is taxed as an S corporation, then it would need to be based on the W-2 wages from the S corporation. You cannot use outside W-2 wages, such as wages from your daytime employer, for contributing to the solo 401k plan. And you are correct regarding taking into account 403b regulations. With the 403b, if you're trying to make contributions to the solo 401k plan, whether pre-tax, Roth, or voluntary after tax, those solo 401k contributions will be impacted directly by any contribution you make to that 403b. Meaning that if you've contributed to your 403b, then you're going to have to reduce the amount that you can contribute to the solo 401k plan by the amounts already made to that 403b plan. It's one of those quirky 403b regulations. I wish they would change those rules, but they have not. Those same rules do not apply to 401k plans, only to 403b plans. Let me send over a link regarding the 403b aggregation regulations. Take a look at that link there. Let's see here. Here's a question. What is the difference between a Roth 401k contribution and a voluntary after-tax solo 401k contribution? Good question. So the voluntary after-tax solo 401k contribution is part of the mega backdoor Roth solo 401k strategy. So the voluntary after-tax solo 401k plan is used to get more Roth solo 401k funds into your plan. Because typically with the Roth solo 401k plan, you can only make the annual employee contribution. So for tax year 2025, for example, the maximum contribution that you can make to the Roth solo 401k, if you're under age 50, is $23,500 on the employee side. Well, if you want to get more Roth solo 401k funds into the plan, that's where you utilize the voluntary after-tax solo 401k bucket. So you would contribute 23,500 using year 2025 contribution figures. You would deposit that directly into the Roth solo 401k holding account. And then assuming you have enough self-employment income from your self-employed business, you can contribute the remaining amount to the voluntary after-tax solo 401k plan up to the overall limit of $70,000. So you would make a $23,500 contribution to the Roth solo 401k. You would then subtract that 23,500 from $70,000, which is the overall limit for tax year 2025. And the difference would be the amount that you can contribute to the voluntary after-tax solo 401k, which would be $46,500. You would then convert that $46,500 to the Roth solo 401k, resulting in $70,000 in Roth solo 401k funds for the year. Hence why it's called the Mega Backdoor Roth solo 401k strategy. So the purpose of the Mega Backdoor Roth solo 401k strategy is to get more Roth solo 401k funds into your solo 401k plan. That's the sole purpose of it. Some clients forego making all the other contribution types and they solely make voluntary after-tax solo 401k contributions up to the overall limit of $70,000 because it's a dollar for dollar calculation. So for example, if your self-employed business is taxed as an S corporation, all you need to pay yourself is $70,000 of box one gross W-2 wages, and you can contribute that entire $70,000 to the voluntary after-tax solo 401k bucket, and then convert it to the Roth solo 401k or the Roth IRA. And now you've maximized your contributions for the year based on tax year 2025, all going indirectly to that Roth solo 401k. So that's how you really supercharge your Roth solo 401k gains or savings, I should say, by utilizing the Mega Backdoor Roth strategy. Is it better to have a centralized non-brokerage bank account as a central account for all brokerage accounts? Uh, well, I mean, there's what's the saying? There's more than one way to skin a cat. Uh, Number one, you want to make sure that ultimately you have separate holding accounts, such as what's outlined in this on this slide here. So you want to make sure you have a pre-tax holding account, a Roth holding account, and a voluntary after-tax holding account. You don't have to open up all these holding accounts at the same time. Also, this is not considered three separate solo 401k plans. It's one solo 401k plan that allows for these various contribution types. So yes, you can open up a bank account or a brokerage account for the solo 401k, and then you can have all the contributions flow from that one bank or brokerage account over to the respective pre-tax Roth and voluntary after-tax once you've made the contribution based on your earned income self-employment activity to that particular holding account under the solo 401k. So that's an option. Okay. Let's keep going here. What's this question about here? I did 10,000 of freelance work using personal social. I'm also a member partner of a multi-member LLC taxed as a partnership with 35,000 in income attributable to me. Which entity would I have to make the solo 401k if I want to maximize how much I can put in? So it sounds like you're going to have two separate solo 401k plans because you've got, it sounds like you're self-employed as a sole proprietorship contractor. So you would open up a separate plan for that. You would make contributions to the solo 401k plan based on your net self-employment income from that 1099 income. And then if you're a partner in a multi-member LLC that only has partners, so owner-only employees, and that partnership does not employ any non-owner full-time W-2 employees, then that multi-member LLC can open a solo 401k plan. So that would be a second solo 401k plan. And then you would make contributions to that second solo 401k plan based on your Schedule K1 self-employment income line. I think it's line 14 of your Schedule K1. See if I can share a link with you here. There's the Schedule K1. You're going to look at line 14 with the code A. That's titled self-employment income line. So the contributions to your second solo 401k plan would be based on that Schedule K1 line 14 self-employment income. Take a look at that link I just shared with you. Here's a question here. I already have a Roth Solo 401k plan at Schwab. What do I need to do to be able to take a plan loan? Upon contacting Schwab support, they say the plan doesn't support plan loans. And they are correct. It sounds like you opened up a solo 401k with Schwab that doesn't have all the bells and whistles. You would need to open a solo 401k plan with a provider like my solo 401k Financial, who offers a robust solo 401k plan that allows for participant loans, the mega backdoor Roth strategy, and the $1,500 auto contribution credit, to name a few features. So you can restate that existing Schwab solo 401k plan to a solo 401k plan by my solo 401k Financial. And we can help you to open up new brokerage accounts at Schwab for the solo 401k to my solo 401k Financial, because Schwab will not let you use those existing Schwab brokerage accounts because those are for the Schwab solo 401k. But Schwab does provide what they refer to as company retirement brokerage accounts for a solo 401k offered by my solo 401k Financial. We would then help you to move internally all your equities and funds and that existing Schwab solo 401k to the new Schwab brokerage accounts for the plan offered by my solo 401k Financial. We would then draft solo 401k participant loan documents, and you would be able to process the loan from that new Schwab brokerage account for the solo 401k offered by my solo 401k Financial. That's called a restatement. So you would complete our online application and you would provide the original effective date of that plan that you open up with Schwab so that we can populate that date on the new plan documents. We can do the same thing at Fidelity as well, and other brokerage firms or banks for that matter. Okay. Here's a question. I'm confused about the difference between a Roth IRA and a Roth 401k. I opened an account with you and established three separate brokerage accounts at Fidelity as instructed, and one is the title Roth. Is this a Roth 401k or a Roth IRA? Well, number one, we don't offer Roth IRAs, so we know it's not a Roth IRA. So the answer, yes, that's your Roth 401k holding account for the solo 401k. So a Roth IRA only allows for Roth IRA contributions, which, if my memory serves me correctly, you can only contribute $8,000 as an annual Roth IRA contribution. Whereas with the Roth Solo 401k plan, you can contribute $23,500 as an employee contribution, for example. And it's also used when you process the mega backdoor Roth Solo 401k conversion. So here's an example here. So it's one solo 401k plan that allows for various contribution types, and you have to have 3 separate brokerage accounts if you use Fidelity or Schwab, for example, to hold the funds for the plan that we offer. One would be titled pre-tax, the second would be titled Roth, and the third one is after tax. So pre-tax solo 401k funds, Roth solo 401k funds, and voluntary after-tax solo 401k funds. So no, it would not be a Roth IRA. It would be considered the Roth solo 401k holding account. Good question. Okay, we only have a few more minutes here and we'll be done for today. Thanks for bringing all your good questions. If I establish a solo 401k in 2025 and fund it in 2026, will I be able to reduce income by the contribution amount for 2025? Yes, you will. Because remember, solo 401k contributions for the solo 401k plan can be made in 2026 by your business tax return due date plus timely file extension. All you need to do by December 31st is establish the plan, and we can help you establish the plan the same day. And then you can open up the bank and or brokerage accounts in 2026 by your business tax return due date plus timely file extension and make the contributions for tax year 2025. And you're going to claim those contributions on your taxes when you file your taxes in 2026 for 2025. Will I be able to convert to Roth shortly after funding in 2026? Certainly, you can convert the voluntary after-tax solo 401k funds immediately to the Roth solo 401k. You typically want to convert them right away so that only the gains are taxable. So if you have small gains and you convert those to the Roth solo 401k, you will only pay taxes on the small gains. Great question. Okay, that's it for today. We've been on for about an hour here. Thank you so much for investing your time with us. Your retirement future is worth it. Please take a moment to like and subscribe so that we can keep building this community. And we're getting close towards the end of the year. So if you haven't yet, go ahead and make sure you open up your solo 401k plan. Until next time, have a great rest of the day.